And we're back with Tim Pagliara, who's Chief Investment Officer at CapWealth. A slight correction to what we'd said earlier. The institution has $1.2 billion under assets under management. So, Tim, let's take the conversation forward in terms of, some of the ideas, actually, that you like in this environment. I just want to pull that up for our viewers. Of course, you have a liking for Berkshire Hathaway, but I'm interested in Chevron more. Is it a dividend play that you're sticking to it?
Yes, 3.85% current dividend yield, great operating earnings, strong balance sheet, and we believe that, the price of oil will be stable at a minimum and probably go higher from here, longer term.
What about CVS Health? Because many have, pretty much cited this one as a preferred pick from the healthcare space. Could you give us a sense of what's the rationale here? Because the stock hasn't quite impressed investors in the last 12 months. It's minus 30.
Yes, and I think it's a great value right now. It's one of those companies that you're going to have to be patient with. They're very uniquely positioned to innovate in the healthcare space around cost reduction. And for that reason, we like them. They've got a good dividend. The dividend's secure. They just made an acquisition with Oak Street Health. So I think that, again, it's just one of those companies you're positioned in that should deliver really good returns over a 3 to 5 year period. And it's a great valuation as well.
Tim, can I just swing back to something we were talking about before the break? Because you mentioned in terms of China exposure, you look at companies like Starbucks. I can only imagine that perhaps Nike and Apple are also a part of that mix. But tacking it on to the geopolitical concerns that you have with, strictly China shares, whether it be, on the H-share or the A-share markets, are you not worried? Because, I talked to a couple of people and they're suggesting that they see a fear that as the geopolitical tensions heat up, that actions might be taken against the likes of a Starbucks, the likes of a Nike in China as a means of, slapping the United States back for any kind of potential sanctions. Is that something that you're worried about or you're thinking about in terms of how you're going to allocate moving forward?
Well, I think it's a good point, and it's something that, it would be a concern. In a company like Starbucks, I don't feel like there's much to be gained in backlash there, like there would be, for example, in the banking industry or, other companies, for example, like a Boeing or that would have some type of national significance relative to things that they'd like to do for themselves. So I just don't, it would be a concern, but it's not overriding given the nature of the companies that we like that have exposure there.
And of course, the classic compounding story in Berkshire Hathaway. Do you like that Japan bet?
Yes, everything about Berkshire, their discipline, for example, listening to Warren Buffett in his annual meeting, how difficult it must have been every Monday morning buying 90-day Treasury bills with 5 basis points attached to them. And so that discipline and hoarding cash and making selective investments, he's going to have over close to $7 billion worth of operating earnings from just the 500 basis point increase in short-term rates that he invests in. So that $50 million that he was making 2.5 years ago is now, growing to $5 to $7 billion. That's just on his cash. So he's a smart guy, and he has a tremendous team that he's built around him. And so I think that's just a really safe bet.